Right. So I'm recording the session live. I'm gonna share my screen now. Okay. So screen is shared, and obviously I've got a couple of pairs there that we can look into. But the first thing that I wanted to do basically is to go through harmonic and mnemonic patterns. That's one thing that I wanted to go through today. I've started the first session of that particular training over here on YouTube if you haven't get to watch it. So I've got the first video I ever on YouTube. One second. So, and that's where I detail the foundation or the groundwork for the harmonic pattern, which is the A, B equals to the C, D pattern. So if I go back to Zoom, hi Stephanie, um, this is the video that details the first part, first of all. Good. So first thing first, when I'm looking at trading, I first of all do some due diligence by going into the fundamentals, by checking things like Forex Factory to see whether any data is coming up at the time when I'm going to be looking to trade, if there's any. All right, so there will be wage price index within the next 20 minutes. That can have effect on price, and then we have the German GDP quarter as well coming up. And then today as well, we have the Canadian CPI, the US retail sales are both coming up. So we're going to have a couple of movements in Australian dollar, in the German prelim GDP, which will affect the euro. And then obviously the CPI data that will affect the Canadian, and then the US dollar retail sales will affect the dollar pairs. So those are the three currencies that may have some volatilities going into them today. The other thing that I'll do again is I can look into something like Bloomberg to see whatever is coming up. And then the third thing that I'll do is I have another website there, which is Forex Live. I just want to get myself in tune with what is going on, especially if I haven't been on my seat for the last couple of hours. Couple of things might have been going on, which will have impact in the way that price is going to be moving. So, like South Korean financial minister says, monitoring if any had behavior in FX market too. Right. So that is affecting the South Korea one, talking about intervention, recap of comment from earlier from San Francisco Federal Reserve President Daly, Australian Westpac, came out, BOJ Kuruda, um, speaks today, also Kiwi dripping a little lower. Right, so I've kind of seen what is coming up and what is already out. So US President Trump expected to sign another paving way for US telecoms to ban Huawei. So a lot of concern on trade talks is still going on. Expansion and recovery in the US economy is looking sluggish, and that has been affecting the stock market lately as well. Euro AUD trade recommendation. Um, and also like that are coming up. So May to bring Brexit deal back to Parliament start of June. That is one particular case that's affecting the pound. So I think we kind of have an overview of what is going on in the market. The next thing that will give you as a tool will be my Forex volatility tool that I use. And then the risk management tools that I use as well on baby things. So what I'm going to do is I'll just copy all this into the group so that you can have them. It's essential that you approach your trading day like this so that you can at least have a foreclue of what is going on in the marketplace just before you delve in. So I use the forex volatility for me to measure and know the amount of pips movement that's going to occur today. So say for example, the Aussie is likely going to move within the next 15 minutes or so based on the data that's coming out, and then I can see that we can see 158 pips in pound Aussie, euro Aussie 84 pips. Those are the kind of pairs that I can look into. They've got a large amount of pips movement that can come into them for because of the volatility that can come out of that particular news that's coming. And we might attempt to trade it and trade it along the news side if I'm still watching carefully um, the market going forward. All right. So if I want to set that up, I'll just go into the chart of pound Aussie. Say for example, this is just for the news, just because the news is coming out. That's the reason why I'm doing this. Very soon I'll move into the main core essence of the day. So that's pound Aussie. Then I want to look at Euro Aussie too. So I'll look into Euro Aussie. And then Aussie against the dollar might be a good mover to Euro Aussie. Wow. For a couple of people in now, I've got Gladys is in, Akil is in, Edward is in, Jamil is in, Patricia Woodley, and Samsung. I don't know who Samsung is. I'm sorry, but that's the name that I found. All right, so these are the kind of trades that I might look into for the news that's coming up. Since that is coming up between our session, we might have to take advantage of it, should in case it's gonna move. All right, and then we have another one right here, which is gonna be the I'll use this one as Aussie dollar. Then I'll place them on a 4-hour chart, Aussie dollar 4-hour chart, and the other one, the USD 4-hour chart. Right. And another thing that I normally look into for trading the news sort of is I look at what is strengthening and what is weakening. So in this case, I can see shoes is strengthening. I can see that the New Zealand is weakening as well. So I might look into Aussie Swiss and Aussie New Zealand on the other hand as well. Then after that news, we just delve into the main business of the day. So I'm looking into Aussie New Zealand. let's see, New Zealand, yeah. And then the last one that I'll look into will be Aussie Swiss as well. So we've got 12 minutes to the news coming up. So for a couple charts here, and this last one is going to be for the Aussie Swiss. Right. Can everybody please type into the chat room where they are logging in from this morning, and at the same time, let me know what their trading experience is just before we begin the actual training on harmonics that we're going to be looking into today. Right. So if you can just do that for me in the chat room, I would so much appreciate it. It gives me a sensible way of looking at how best I can serve you, how many months as well. If you can show me how many months you've been trading, it gives me a clue to know whether you've seen the charts before or you haven't actually seen the charts before, and yeah, Marcel has been doing it for about a year, probably off and on, I think it says. All right. So how about the rest? So I've got about 10 minutes. I'll carry it. Please, if you can just send that into the chat room for me and have a look at it. I just want to look into possibility of trading this news today, um, live as well. And then obviously I'll just do a straddle technique on that. And that's me having two orders in the market, one buy stop, another sell stop in the market at the same time. So whichever one got activated is the one that I'm gonna stick with, because I wouldn't know what the outcome of the news is gonna be, and I'm not gonna be guessing what the outcome of the news is gonna be. I just want to be part of that particular outcome when it occurs within the next couple of few minutes. All right. So this is the technique that I use in trading the news, and it's called a straddle technique. And obviously, a lot of people have been benefiting from it from the time that I start to teach it. I receive a lot of positive feedback from people who make money. Sometimes we do have the brokers taking advantage of us as well. Right, so it's just a way of please. You can only trade this with money you can afford to lose. Any risk that you're taking based on my recommendation is just for educational purpose. So if you can afford it on a live account, you can just practice it on a demo account and then see if it works out for you. Because we can have slippage, we can have all sorts of different kind of trading um, trading challenges that can come into any setup that we're trading. So I've set up the straddles. I don't like switching time frame anyway, but if I switch time frame, it will give me clear sense of where my orders are, and then obviously I'll be able to see them clearly. I like to see them on the 4-hour chart because if this is really going to move, irrespective of wherever my order is, I will get well filled. And what this strategy does is it helps you to look after the surprise that may occur in the market. All right. So just a couple of seconds to the release of the news. We don't want to get it into any position whatsoever before the news. A couple of seconds into the release of the news, we don't want to get it at all. So in the event of getting it or your position got activated before the news, I will advise that you have a stop in place. I will advise that you either scratch that position and place another one. You don't have to get it before the news. All right. So that's the Gladys. All right, no problems. So that's the straddle technique setup. We will be looking into continuation of our harmonic class today. We will be looking into a bat pattern today. We've looked into the AB equals to CD pattern, and we've looked into the Gottlieb pattern. All right. So today I want us to look into bat pattern, and then possibly we can look into the butterfly pattern, and we can look into a couple more patterns as well, just the way that I've listed it. But I want us to look into it in such a way whereby you can grasp the concept. The next time that we are on the chat group, you are able to post the chart regarding what is length. You are not just able to post the chart, you are able to make use of it to generate profit for yourself or whoever you and them is trading. Yeah, and that's the main essence of doing some of this training, because in every trading strategy, you need to have a method in place, okay? And the method that you have in place need to have the entry setup, need to have the stop for account protection, and the third one is going to be the trade management, which is going to be target profit. If you do not have those three elements in your trading strategy, you do not have a method, right? If you are trading without a stop, I can guarantee you that in no time you will realize that this is not for you. Love when it comes to trading, those emotional challenges are what we define how successful we are in this business. If you've been following some of my trading psychology write-up, I'm actually on volume 8 as of today. They are all in the chat group. Those are the kind of things that you need to know. A lot of people delve into this opportunity of trading without understanding the necessary skills that you need to have as a trader, such that if you do not have those skills and you do not bother to develop them, acquiring a long-term success can start to look very shabby at first. And if you're not patient enough to be able to follow through, then obviously you will now find yourself in the category of traders that dropped out within a couple of months of joining. But I'm glad that tonight I've got a couple of people in the house that have got about a year experience. I've seen 9 months experience. I've seen 4 months experience. And when it comes to trading, there's no champion in this. You know what I mean? Anybody can make any unnecessary trading mistakes. You know, it is built into the system. There's nothing you can do about that. If you are not just seeing things clearly and understand when to act, then you can definitely be committing also different kind of trading blunder going forward. All right. And this is another strategy that we'll be looking into going forward in our journey and experience together. This is called a Renko chart, and as you can see, it's kind of different to the normal candlestick chart. It gives a different kind of perspective as well. So it's something that I'll be teaching you going forward, not today, but yeah, um, I will I will teach it going forward in the nearest future. You can see that this is more or less a smoother chart, and it gives you the opportunity to just concentrate on what matters rather than letting the spikes left, right, and center that we're having on the chart run us insane. So the Renko chart can do that for you, and we will be looking into incorporating it into some of the strategies that we've learned going forward. All right, so we've got the news coming up within the next 1 minute. All right. So what I'm going to do is I'm just going to switch to the 1 minute chart and see whether we're going to have any effects of this news so that we can call the crap and just deal with what is standard going forward. All right. So I think the news is out. It's going to be out in the next couple of seconds, 4 seconds. All I don't want to do is I don't want to get hit into any of the position before the news. And I'm struggling to keep up with, all right, so the news is out. You can see the effect. It's a push up in the price of the Euro Aussie. One of our position is going to get hit on the Euro Aussie on that 1 minute chart, if possible. I don't know, but I'm looking into it, right? And then it's turning into a spike now, so I want to be careful with that kind of a spike. I'm looking for the Aussie New Zealand chart, and it's running away from me. Right, so with this kind of a spike now, all right, so I got the Aussie New Zealand chart. None of the position has been activated within the first my charts are frozen for one reason or the other. I don't know. Right, so we got a huge spike, and that's one thing that you want to be careful of, because with this spike now, the news came out. It was a surprise at first, then it's fizzling out for the second moment. You get all that when it comes to trading the news. Everything might decide to reverse and go the other way around. It's not a problem. You can now see that if we use a smaller time frame chart, we might get caught up in some of these acts, and then obviously it might not be looking good immediately. So right, so that's the effect of the news. It's a spiky type of a news. It doesn't give us a longer term results as we'll be expecting, probably continuous pushing higher. We didn't get that for now. And it was how many pips move, let's see. So from around then 35 to say about 10 pip move. All right. So because that didn't get activated, I'm not going to be playing it anymore. The result of it is that is done for me. Now, the effect of the news, the reason why I place all this order, I don't need them anymore. I need to reanalyze my charts and see whether I have any opportunity that I might be looking into. So I'm just going to nullify all the orders that's on. And yeah, we can then carry on with the day's business. There's another particular one on Euro Aussie New Zealand, rather. Just bear with me while I'm just trying to. Right, so that is that. Sometimes we play the news and we catch a lot of beeps. Sometimes the effect wouldn't just produce any much of a result. So if it doesn't, it doesn't. We don't have to kill ourselves about anything. Let's just get on with the business of the day. All right. So the first thing that we look into is I've basically shared my how I start my day review, which is about looking into what is coming up fundamentally. That's what delays us from starting this class immediately at 2 o'clock because we realize that that fundamental news is going to come out. So we've seen the effect of the fundamentals now. The next thing is for us to continue to reanalyze our chart. All right. So a couple of Forex Factory. I use Forex Factory for fundamentals. I use Forex Summit too for fundamentals. So if you're new, right? If you're new, there are a couple of ways in which we look into trading. Okay. I bet someone is new. Patricia, right? So Patricia, how long have you been trading? How long have you been trading, Patricia? Right. So I use this one for position size calculator, and it's very essential that you understand all these tools and how to use them. I've done a lot of class on them. In majority of my classes, I always repeat them. You cannot be a doctor and not have a stethoscope. You cannot be a nurse without um, having the syringe and needles. So you go have your tools, you go know your tools and understand your tools. Okay. All right. So if can is Patricia still there? Let's see. Oh, I think she's gone. That's why. No problems. Okay. Is there any charts that you want us to look into at all to start our day on harmonic class continuation? This is going to be the volume 2 on harmonic patterns. Is there any charts that you would like us to look into? Right. So in the mid, um, while I'm waiting for answers, sorry, EU and GJ. Edward says EU and GJ. All right. No problems, Edward. We look into that. First thing that I look into is I try to look into what the dollar index is saying, first of all right, so that I can have a core idea of where price is going. Okay. So, and I've seen that the dollar index right now, we've literally broken above an important resistance zone. Price has come back into it, and it's been following some weakness all the way back down as we go. The dollar is just falling, but you cannot ignore the last 2 days. Okay, on Monday we've hit a 36 EMA retracement zone. We literally fall significantly. Then we come back above the previous day. We come back above the 2 days low, and then we form a significant doji, and that is Nama right there after a slight downtrend. Okay, and we have a Nama forming at an area of good support zone, and that AMA had got a continuation, all right, which is yesterday, and that continuation literally closed above the 12 EMA, and then that is positive for the dollar going forward, although it closes into an area of resistance, right? And that area of resistance before was broken, it should turn into a support. It turned into support. The support held for some time, and then we couldn't sustain the highs anymore, and then a lot of selling pressure comes into play, and we find it difficult to hold that area of support and price breakthrough. So now that we are going back into it again, right? So we're looking at a few resistance ahead of us, okay? We're looking at a few resistance ahead of us, and that resistance, we cannot ignore it because we've got this first eye, second eye, and then this will be the third eye getting closer to the trend line. So we want to watch for how the dollar is going to react around this trend line. And as you can see out of my previous analysis, if we hit this trend line and we cannot close above it, then that will be the beginning of continuation onto the downside. So we need to break well above this trend line and start to have that push up for the dollar to become positive, okay? But for now, that is the challenge that we need to overcome. So we see some buying pressure coming into dollar. What we don't want to do, however, is to take the first sell coming in today, okay? So we don't want to take the first sell just because we have this huge bullish momentum into the dollar. So this particular move that we are seeing that's coming down, just because we have the positive push up in the dollar, we don't want to take the first sell, and that is what we are seeing right now. This first sell, we want it to come all the way down to an area of support, right, which is going to be this area or even this area right here, okay, or even this area right here, or the area of 200-day moving average. Then if we see, this is how to filter, all right, to understand how to approach your trade. So if we see any price coming down like this, we don't want to take that for sell, right? We want to wait for rejection in certain areas. This area being the first, right, which correspond to the 63.36 EMA. At the same time, in this particular zone, can be a huge price turnaround for dollar to continue to go up. If we fail that area, then we are coming to this 200-day moving average. But overall, for now, this particular zone can hold price very well. It has done so before. So we are expecting dollar to fall slightly a little bit before getting the push up to go higher. All right. So the first sell is not going to be very strong for us, okay, because every other thing on the daily, right? Please pay attention. The daily is signifying to you the tone, the underlying tone, and you can see that the underlying tone is positive. All right. So what you don't want to do is you don't want to be going against this underlying tone, because this is 2 days worth of trading, and that 2 days worth of trading met some huge rejection. I like to see a candlestick like this because that shows me there are some aggressive buyers that comes into the market. All right, when I see a huge candle with a strong tail like this, which is even an hammer, right, it shows me that we met serious rejection at the bottom over here, right? That makes us not even just trade back into the open, but we then close above where we open for the day. We even spike a little bit higher, and then the subsequent day, however, now give us this bullish continuation. So when I'm seeing this sell, I'm still thinking about all this move that happened before, and I'm not going to be taking the first sell. The first sell is usually the fake out, right? So once you jump into the first sell, then that can be very detrimental. So you want to use the first sell as a buffer to actually look for where the price is cheaper to go into this dollar index. So we are looking at dollar to be very positive, and then that will now translate to what we're going to be seeing on our EU. All right, so someone wants us to look at EU. All right, so this is the Euro USD, and I'm going to start the business of the day on the patterns that we want to trade on this particular chart. So I've got a lot of my Euro USD charts marked up. Let's look at this. Okay, so I think we managed to get an empty chart. All right, so the first thing first on Euro USD is I want you to understand this. When you look at your charts, okay, and you're looking into possibility of pattern, anything on the chart can be a pattern, all right? But how do you now make use of whatever you are seeing on the chart that it's a pattern? All right, if I squeeze this chart like this, okay, and then I'm looking at the 30-minute chart, it doesn't really matter for this illustration for now. What I can see is I can see a sell-off right here, yeah, but just before that sell-off, I can see this particular pattern. Can anybody see what I'm saying over here? Just before the sell-off, I can see that we range inside there, then we have that sell-off. Can you see that at all? All right, so that ranging behavior right there, it's a pattern that now leads to another kind of behavior, all right? So we have a ranging market situation. When you look at here like this, good morning, right? I can see there's another pattern, more or less like a triangle pattern, and then we saw the huge significant sell-off. And those are the kind of things that a trader needs to have a clear view of what is going on the chart before you just start to make a buying and selling decision. All right, so I'm looking at this, I'm looking at a couple of things that's happening, and you and I over the last couple of 13 years that I've been trading, experience has come to tell us that some of these patterns, they tend to repeat themselves in the marketplace. Okay, these are just simple basic pattern. Okay, and all these simple basic pattern, they have a way in which they repeat themselves. They don't have to look exactly like each other, but as you can see a couple of ranges, and after the range, price will eventually break out. All right, and that's where you want to be. Being inside there can be very detrimental. When you are able to see the breakouts, there's no need for you to be thinking twice, what is going on? Am I going to be buying cheap? No, it is coming out of a significant equilibrium zone. Okay, so the market will first of all sit down in a zone by resting there, and in that particular zone it will be contracting. Okay, all the orders are, a lot of buying and selling will be taking place over here, right? And then when those orders are now getting short, when one particular one is getting short, the one that is more will now take over the move. All right. So when you are seeing a breakout out of a consolidation zone or out of a ranging zone, you gotta be ready to take your trade in the direction of that breakout. Okay. So you won't be expecting to buy from here just because you are looking at price cheaper. No, this is a breakout out of an initial pattern or out of a zone. Look at that. All right. So if I come back to here again, so ability to having the third eye to be able to sense this or to be able to look for this in the market can definitely improve how quick your trading results can come into fruition. can you see that this particular pattern, looking at it and looking at this pattern almost look the same? We have first touch, second touch, third touch, first touch, second touch, third touch, all right? And so, and that's the reason why we look at patterns in the marketplace, so that we can then use the previous behavior of price, right, on that we've seen before, and relate it to the current behavior that we are seeing. And then obviously we can then take advantage of price when it's breaking out of that particular zone. Is that understandable at all? Are you all there with me? Are you getting the essence of why we need to see clarity on our charts before going forward? I'd like to give a little bit of a shout out to Andre, Bumi, Edward, Forex Delight, Fran, probably that's Franca, I'm not sure, I'm mad linguistic, Azan Sauce, Marcel Gibson, Zakaria Dar, Festogo, Gladys Wadunga. All right. Thank you, ladies and gentlemen, for joining in. I really do appreciate your time and effort in trying to learn. All right. So understanding all these little patterns can make a lot of difference in your trading. All right. So these are just pretty simple ones. Okay. So when we start to look at a little bit of a more complex pattern, all right. So if you are here for the first time, I think I've got a particular person earlier, probably they're gone now, and that would be Patricia. Okay, I don't think she's there anymore. She's the only one that's new. If you are new, please type in where you are logging in from and your trading experience. I'm going to be doing an intermediate class training now, all right? And the training that we're going to be doing is going to be based on harmonic pattern, and we're going to be looking at back pattern. But just before we do that, I just want to run a quick recap on what we've done before in this series. And then obviously, if you haven't been able to watch that video, you see this video, you'll see the beginning of all harmonic pattern in this particular video that I posted over there. All right, so you can take advantage of that going forward. A lot of things to benefit. All right, so what we are trying to look at now is a little bit of complex pattern. Apart from this ranging situation, we are now looking at a pattern that's got to do with retracement and continuation pattern. All right. And the first one that we've looked into in terms of retracement and continuation pattern is the basis of all pattern, especially in harmonics, is the A to B equals C to D pattern. All right. That's the basis of all patterns. So which means we can then label our A to be right over here. And then we have a B somewhere above here. Okay. And then we have a C, so that when next you're looking at harmonic, you can understand how to treat it. Does anybody who is having difficult understanding harmonics here, or who is already trading harmonics? So if you're already trading harmonics and you can identify it, please go into the chat room and signify. If you are new and you are still looking to learn it, please go into the chat room and let me know as well. All right, so what we're saying in essence is this: we have a move that goes all the way up. Okay. All right, so in this particular case, we can look at any move that's going all the way up. And each and every time when the market moves up, you can be rest assured that it's going to move down. Okay. All right, so the market will move up. All right, which means the market will rally in this case, and then we're going to have a retracement of that particular rally. Still learning our minutes. All right. And does anybody knows the reason why we have a retracement in every price move? All right, so each and every time when we have a rally or we have an impulsive move up, okay, just because these are orders that goes into the market, there will be need for balancing. Okay, some people cannot be holders in the market for a long time. All right, some people want to take advantage of that short period move and then take profit. All right, so when you are now seeing retracement, retracement can be as a result of what? Profit taking. Okay, so if it's as a result of profit taking, then obviously it's not going to erase the actual prior move. Okay, if it's as a result of new orders coming into the market, then we're going to retrace the previous move. Okay, and those new orders, if they are strong enough, they will be able to form a new low. Okay, but if we are seeing a profit taken in the market, then obviously what you will see is it's going to be a retracement of certain total value of the initial move. All right, so and after that particular retracement, now if it is not caused by new influx of serious orders coming into the market, then we will see the continuation of the previous parallel move, which is the buying move, in another phase of a rally. All right, so we're gonna have the first rally, which is the A to B, okay, and then we're gonna have a retracement of that move, which is the B to C, and then we're gonna have a third move, which is the C to D leg. All right, so looking at the marketplace like this, we now tend to start to look at how can we make sense of this? Then we start to use a measuring tool. Like a doctor, you need a stethoscope to be able to measure the heart rate of someone. So we start to use a measuring tool to measure how far these retracements are going. All right, and this is the sole basis of the the harmonic pattern, which is going to be the A to B equals C to D leg 4. All right, so me looking at this pattern now, what we are now trying to do is we're trying to measure the relationship between the first move up and the relationship between the retracements, all right, to give us a sense of where the third move is going to be, all right, and that's basically what the A to B, B to equals to C to D do. So what we then do is we can then employ our Fibonacci to say, for example, from that particular high to that particular low, all right? And in this case, we want to measure how well price retraced all the way down, okay? So in this case, what we'll be saying is we need to reverse our Fib to measure the actual extent of this particular move. So we can see that a total of 61% of the entire move here was completely retraced, which means whoever buy on this price managed to hit a jackpot, which is 61% cheaper than the people trading over here. All right, so when you can buy anything 61% cheap, that shows that you are gaining value. And that's the reason why a lot of people do not worry about the impulsive move. First of all, they are much more happy to catch the retracement. And that's what happened in gold yesterday. All right, so the gold day before yesterday, the gold managed to break a pattern zone. You see all this pattern, gold managed to break a triangular pattern to the upside. And now a lot of people is waiting for this particular retracement to look for where it's going to end, right? And then buy it back in a much more cheaper form. Is that understandable at all? Right. So, right. So moving forward quickly, yeah, because I'm just quickly recapping what we've done before for people who didn't manage to be there. All right. And for people who manage to be there, this will be another eye opener for them. Right. So having measured the first leg of the rally, which gives us a 61% retracement, now it's a time for us to measure the second part of that particular rally as well. All right. I'm just going to change these settings back to where it's supposed to be. right? And that first leg of this, the second leg of the rally, which is going to be the B to C leg, right? We are going to be measuring the extension of that, all right? Which means the first one, we are measuring the retracement to see where price ends. This second one, however, we are measuring the extension to see where price is going to extend to, okay? All right, so in this case, for the AB equals to CD pattern, normally what we're looking for is ideally we want our price to retrace um, from the rally on A to B to 61.8, which is where we got. All right, and then we want to be targeting the 1.618 extension of the A to B move, all right, which is going to put it just right above there, okay? So once you have a move like this, what you are anticipating is going to be a fall in price, okay? So which means just because of this pattern alone, you can have a methodical way of trading such that you know where your entry is. That is key, and that's at 1.618 right there, okay? And then you want to put your stop just a little bit above 1.618 in case of any spike, say about 10, 15 to 20 pips to 30 pips above that 1.618. That's where you want to put your stop, all right? So the actual entry is going to be the 1.618, so that if you do not have time to watch your system, then obviously you can still trade and trade in a much more mechanical way. All right, you wouldn't worry about the good morning buyer. You wouldn't worry about all the things that's going on in the marketplace. You've done your measurements. You're waiting for price to get to 1.618. You've got your sell limits in the market, right? And then obviously when price hits there, it's going to take you in. This a high probability setup, right? And then you'll be expecting for price to give you a decline, all right? So you have your entry right here, you have your stop above it, right? Now, what you need now is going to be your target, all right? There are also different ways to measure the target. Now you can then look at the entire move, all right, which is going to be between A to D, which is the whole length of the move, by shifting your Fibonacci to where the D point is, okay? Right there, right? And then shifting it down to the beginning of the move of the rally, which is going to be the A right there, okay? So you have that right there. And what you're looking for, first of all, for your target will be a move back down to what? To, now I need to reverse this so that you can see the first move will be back to 38.2. That's where you need your first target to be on this particular pattern, all right? And once you have your first target there, you can then look at whether you have a peak over here, which can be an area of resistance that will prevent price from getting to 38.2. So if you have this peak of the A to B leg, you're better off taking your profits around there rather than letting it get to 38.2. All right. So that is if you want to take the first target profit. All right. But if you do not want to take the first target profit and you want to carry on with this particular move, if everything according to the trend shows you that this is going to go down some more, then what you can then do is as soon as price is hitting 38.2, you move your stop that's above here to break even point, all right? So that you now have a risk-free trade, okay? So having a risk-free trade will give you a peace of mind to start to look for other trade. If, however, things continue to go your way and carry on going down, then obviously your target will now be much more profitable for you. And then what you will be targeting in this case, apart from the 38.2, is you can then be looking at 61.8 and 100% of the entire move, okay? But if however price has moved down to 38.2 and then reverses, all right, and start to go all the way up, just because you have a method, a mechanical method behind your trading system, and that's the reason why we look at harmonics, right? Because when it comes to harmonic, you can get your entry right spot on. You can get your targets right spot on using the measuring tools, and then you can get your take profit right spot on at also different kind of Fibonacci levels, tagging them at the same time with the market structure, which is going to be all these points here, right? Which can act as an area of support for prices. All these points here, which can act as area of support for prices towards the last points down there. And in some cases, if you're such an aggressive trader, you can even catch the whole length of the move back to another 1.618 at the bottom right here. But you've got also of different incremental points where you can scale out of your position little by little to maximize the profit potential. All right, so if the B equals to CD pattern, if it's understandable, right? Now we can move on to the other things that we want to do. All right, so what then tends to happen in harmonic is this. So just because you have the A to B, B to C, A to B equals C to D pattern, all right? For some harmonic pattern, you have an extra leg on the chart, all right? You have an extra leg. So it's not going to be the first rally. So say, for example, right here now, we have the first rally, okay? And then we have the retracement after that first rally. And then we have that push up. So this is our first rally. Let's measure this one. So this will be our first rally, which is going to be our A to B, all right? And then this is going to be our B to C, all right? And then we then going to have in next C to D, which is in most cases should be an equal move that we are seeing on A to B, which is going to be, 1 second, please, which is going to be right there. All right. So in this now, you can equally see an A to B, B to C, and C to D pattern occurring over here. They are there on the. So now, compared to all this pattern that I've shown you earlier, this is another pattern that's the basis of question.
Continue, sir.
All right. All right. So now you now realize that you can see this pattern in all places. The initial simple pattern are the ones that I've shown you earlier. This is a little bit of a complex pattern, and that's the reason why harmonic can be very tedious for some other people, just because they don't know what to look for. But once you can understand the A to B equals to C to D pattern and how to trade that, right? Because if I employ, let me take the Fibonacci and employ it on there just now, right? If I employ my Fibonacci tool on this particular price level, now you can see that we have a retracement back to 61.8, right? That's where we have a retracement back to. In fact, we cut below that 61.8 in this case right here. All right, so what we then want to do is we want to measure what the B to C leg is. All right, so I'm going to shift my Fibonacci to this move right here. Okay, and then I want it at the top over here. All right, and then I'm going to be reversing this just for me to get the extension at 1.618. All right, so the B to C point, this is A to B. Now the B to C point is what is going to give me the 1.618. And you can see that once we get to that 1.618, just even on this 30-minute chart, which is right over here, you can see that the way the price falls all the way back down. All right. So these are patterns that works in the marketplace. These are patterns that you need to know. And these are the basis of your harmonic pattern. The A to B equals to, let me control Z. I just want to take out the fib. All right. So for harmonic now, instead of having a three leg of AB equals BC equals of AB leg, BC leg, CD leg, which you know quite fully well that your AB leg is a rally, the BC leg is a retracement of that rally, and I've explained to you how retracement work, what constitutes retracement, and when you can know if a retracement remains a retracement, which is just taking profit or balancing of the too many longs or too many buys that's in the market. Traders will be balancing that up, take some profit, get a new entry into new position in a much more favorable price. Because while this is moving up, some people might be getting into the price over here, some might be getting it over here, some might be getting it over there. In majority of the cases, if you do not have a mechanical system like harmonics behind your trading execution, you may find it difficult to be able to catch some move as that when it begins. All right. So the main function of the AB equals to CD is for you to be able to catch the highermost points of the orders that's going to decline. All right. So we can then catch the highest points where the price is going to get to before it retraces back down. But for harmonics, instead of having three legs of A to B, which is going to be the first leg, and B to C, which is going to be the second leg, which is a retracement, and then C to D, which is going to be the continuation of this A to B move. You then have another leg that is going to be your, say for example, you then have another leg that's going to be another push down like that. And that makes it have a fourth leg, all right? And that fourth leg is then named the X to A, all right? So normally you have your A to B equals C to D, but just because you have this extra fourth leg now, which is going to be starting from here, a push down of X to A, right? That is the beginning of all harmonic pattern, all right? So you remember quite fully well that we measure the retracement of this and know the value. We know the value of where we are looking for HB over there. Now, for harmonics, what we now want to be measuring is the retracement of this move all the way down that goes to this particular retracement level. All right. So for each harmonic pattern, there's a specific retracement level for each pattern. The last one that we cover, which is the Gartley pattern, has got its retracement back to 61.8%. All right. So the one that we're going to be covering today is a much more deeper harmonic pattern retracement. The Gartley pattern has got its retracement back to 61.8%. And then we're looking for a much more push higher in the retracement of the X to A, which is going to be at 78.6. That's for Gartley pattern. But the pattern that we are looking at today, which is going to be a back pattern, is going to start like this. Say like we have a move up, right? In this particular one now, we are looking at a much more bullish pattern. For this particular pattern, just because we have the sell-off in the price, right? The patterns that we are looking at today is a retracement and continuation pattern, all right? So what do I mean by retracement and continuation pattern? Look at this, the way that price moves up, all right? And then we saw this particular retracement, then we are looking for continuation of this move over here that we've seen, all right? So retracement of this particular X to A back to a particular region, and then we are looking for continuation of this move in the B point, okay? All right, so that continuation can continue, all right? Or that continuation can hit another area of, say, for example, resistance that will make it not to continue. All right, so in this case, you can see that we have a little trend line that we've drawn over here, and that continuation bounces off that trend line and fails to break that trend line to continue to the downside. Eventually, the trend line was broken over here, but that's for another thing entirely. All right, so Now you are seeing the main reason why when you are looking at patterns in the marketplace, you're going to be looking at not just the patterns, but combining your pattern with another tool can give you a clear view of whether that pattern, even if it reaches the ending point, which is the D point, if it's now follow through, whether that pattern, whether you need to take your profit earlier just because of other things coming up in the marketplace, or you need to leave your position to run. So you have to pay attention. You cannot learn harmonics alone without learning the other important tools that is there to trade the market. All right. So the patterns that we're going to be learning today is a pattern that gives us a much more deeper retracement. Okay. I've spent some time to analyze A, B. I hope that helps because that's the basis. And if you've missed the first class, then obviously um, it wouldn't make sense for you not to know the beginning of it. All right. All right. So now we're looking at this particular rally up. All right. And then we are looking at its retracement all the way back down. Okay. But in this particular case, this rally, we are looking at it to give us a much more um, to give us a particular retracement level, okay? A particular retracement level. And the retracement level that we are looking at for it to give us will now be, if we start to use our Fibonacci tools, okay, based on this particular move, we're looking at some kind of retracement between 38 to, right, and 50%, okay? So we're looking at a retracement either to 38 to, okay, or we're looking at price gives us this rally push up, and we're looking at a retracement back to 50%, okay? In some cases, you can get price spikes down slightly below 50%, which means what you do not want to see is you don't want to see a price reaching the 61.8%. Because as soon as price reaches the 61.8%, this will turn into another particular pattern entirely. All right. So for the BAT pattern that we are looking into, price needs to retrace back to 50%. All right. Between 38 to is the minimum requirement for price to retrace to, and then the maximum will be to 50%. Not, you don't want it to touch 61.8%. You don't want it to even close inside 61.8%. Once that happens, that is not a bad pattern anymore. We are looking at possibility of a gap pattern. All right. So what you can then remember is for each harmonic pattern, for each leg, we have to continue to measure the retracement. So we've measured this retracement now of the X2A. Now we want to measure what is the retracement of A to B, okay? So we want to see our A to B move now, however, need to give us, if you remember, our A to B equals C to D, need to give us another retracement as well, all right? So instead of us having a retracement such as C to D, which will go above this particular A level, all right, we are now looking at a complex retracement that wouldn't get to the A level. Remember, the particular pattern that we are looking for, it's a retracement and continuation pattern. What do I mean by that? So I mean that if the primary trend is going on the upside, all right, we want the continuation of this initial primary trend, which is the XA leg, all right? So where are we going to be looking for that continuation? We're going to be looking for it when we see the initial leg by giving us a retracement back to at least 38.2 to 50%, okay? So we want to see the retracement of the A to B leg up as well, all right? So the first thing that we're looking for is the retracement of the X to A down, all right? Now, once we have the retracement of X to A down, which gives us the A to B, now we want to see the retracement of this A to B, okay, right, going up as well. So that will now give us our B to C level, all right? So the B level is so key, is important in naming our harmonic pattern based on the level of retracement that we got, right? And then now we want to know the retracement of A to B, which is going to move up, but it should never go above the A leg. It should never go above the A point, all right? It can move between 38.2 to 88.6, or it will be even to exactly the A point, all right? Those are the rules, all right? Those are the rules, and they are important to follow them. It's important to follow them. It shouldn't go above that. As soon as price goes above that, this particular bar pattern is invalidated. We're going to be looking at another thing entirely in the marketplace to trade, not that bar pattern anymore. So if it's still there, it's still okay. And then the next thing that you want to see is a much more deeper retracement. Okay, so retracement of the X to A, all right, and now we want to see that continuation. Now we want to see a much more deeper retracement of the X to A before we look into continuation pattern. All right, so now we're now going to be looking for a particular retracement of the entire move, and that retracement needs to stop at 88.6. Okay, usually what tends to happen is when you have this kind of a pattern in place, you'll see that the C to D leg, which is very important, moves very fast. You might be seeing that kind of a move in this kind of a move like this. It will move very fast, such that a lot of traders will be caught out when they see this very fast move coming down. They will never want to catch the knife. You know, it's never advisable for anybody to catch a falling knife. That's one of the first rules that you learn in trading. But when it comes to harmonic pattern, then obviously you have to be catching the knife by trusting the process, because when you see a huge sell-off coming into play, the next thing that you are thinking of is, I want to be a seller. All right. So now you want that retracement to end at 88.6, right? You've got the 38.2, the 50%. Now you are looking for that deeper retracement that will end at 88.6. And that will be the retracement of X to A as well, ending at 88.6. So the 88.6 is your C to D point, all right? So let's label this now. So this will be X, and this will be A, all right? And this will be B, and okay, and this will be C point, okay, and then this will be B points right there at the 88.6. All right, so that's D point. Okay, so if you have your D points right there, now you've seen a much more deeper retracement rather than Gartley, because the Gartley retraces back down to 78.6. All right, the BAT pattern retraces back down to 88.6. All right, so which means the entire move of this is now retracing the whole of it all the way back down, giving back 88.6% of that. And that is a huge, huge discount. Depends on who wants to take advantage of that. All right, so what are the key things that makes price fall significantly from over here? When you look at this move, right? If you understand market structure and you're going to follow market structure, when you have a particular point right there, yeah, this particular point right there is a support level, okay? Once the support level is broken, right? In this case, this area, once it's broken, then the traders do not have any other thing to bother themselves or worry themselves about more than just continue to be pressing the sell button. All right, so while they are doing that, the smarter one who has done a little bit of due diligence understand that at this X level, which is the beginning of the move, has to be an area of important what? Support. Okay, this X level has to be an area of important support. If this X level is not an area of important support, then there's no need for you to be looking for even your D pattern over here. All right, because the only reason why price is going to stop is anticipating that There's a lot of support here at first. The traders that have literally buy this going forward will now be looking into this particular discount of 88.6% and be saying to themselves that this is an opportunity right here for us to go back up. All right, is that clear a little bit? Is this clear up to this point a little bit? So we're looking at a deeper retracement of 88.6 for back pattern, right? And then obviously the reason why we're going to be looking at that 88.6 is because the X level has to give us what? A big level of support, such that when price is coming back closer to it, right, price is going to be anticipating, wow, I'm going back onto this support. And then obviously a majority of the traders that has picked the opportunity from this zone can then come back into backup days. You know, they have taken a lot of profits, prices to moving down, adjusting also different kind of position, because this is a retracement pattern plus continuation pattern. All right. So this usually occur. There are some places on the charts where you find this. Okay, you can find this particular pattern on the wave 5 of the Elliott wave theory. All right, whereby once we've reached wave 5, then price now wants to adjust itself by selling off and then forming a lower high. All right. And then after forming that lower high, then you saw that magnificent sell-off in price, right? And that magnificent sell-off in price does not change the trend, okay? Does not change the trend at all, does not change the bigger trend. The only thing that it does to the bigger trend is, in fact, give it much was equal, more strength to push forward, all right? And then that's what you now see the beginning of a new trend going forward in a bigger buy trend. And this is true for the bullish signal. For the bearish signal, however, right, what you want to see, instead of seeing a bullish or a rally run up, you now see a bearish push down, okay? All right, and that will be a sell-off right there. And then now what you're looking for is going to be a retracement of that to what? What level are you looking for your retracement at? I need answers in the chat room so that I don't feel so lonely. I feel like I said everybody is sleeping. And then if you want to talk, you can unmute yourself and talk. What retracement are you going to be looking at for this particular back pattern? I didn't get a question. All right, so I'm saying for a bearish back pattern, this is the bullish back pattern that we've looked into. For a bearish back pattern, right? So you've got a move that goes all the way down. Now you are looking at a retracement back up. What should the value of this retracement be? That is the question for the bat pattern. So if that's X, while I'm waiting for the answer, I'll just continue to label this. This is going to be our A. Right. So I've only got one person in the class that believes they are so confident in answering that question. Really. How about the rest of us? Are we tired or sleeping? Or do you want us to take a 5-minute break? At 8.2, wow, a lot of people are answering now. So I've got John, 50%, Marcel Gibson, 50%. Forex Delights at 8.2. I've got a day at 8.2 to 50%. All right, so it looks like as if John and Marcel Gibson are the only one who are the macho man here. all right? Because what they've done is they've actually forgotten the 38.2 as well. That's the minimum requirement for the back pattern to fall, while you're looking at 50% for the deeper retracement, and you do not want price to get to 61.8%. Okay, all right. Give me a second. All right. So now that we know that we are looking for 50%, what we will then do is we can shift our Fibonacci on top of this, and then obviously we can reverse it back. Okay, and price is exactly at 50% in this case. Right. So the next thing that we want to see now is we want to see, let me enlarge this a little bit. So it's all about using our measuring tools and using our measuring tools effectively as well. So let's see, it can be between 38.2 and 50. For this case, I'm going to have a double run go to 38.2. That's the minimum requirement I can get to 50 as well. All right. And then the next thing that you're going to be saying is you want to measure the retracement of this A to B. All right. You want to measure this point from this low here to this high, and then you want to see the retracement of it falling between here, right? And it shouldn't go below here, all right? It can still be 1-to-1, okay? It can be at this particular level. You will be able to see that retracement clearly once settings. So it can come to 78.6, it can come to 88.6, it can come to 1, but not below that. So that's not validated. The deeper the retracement, the faster you will see the C to D leg. All right. So now we are looking for C to D leg, which is going to be, where is our D going to end? Answers, please. So if I take my measuring tools back to the X, to A, where is our D going to end? What's the ending point for the D? 88.6. All right. So because this is a retracement, a move down, and then the retracement back to a deeper retracement back to 88.6, right? And that's what is called a bar pattern. Then at this 88.6, that's where we're gonna have a order setup. 88.6. We're gonna have our stop slightly above the X zone, okay? Slightly above the X. And then obviously we're gonna now have our targets going down. Our targets will be for us to be looking for a sell in this bearish back pattern, So it's going to be a retracement of this move, and the retracement of this move is like this. Yeah, the whole of this move like this. The retracement back to the point, but it first of all perform a funny journey of the A to B equals to C to D inside, all right? And obviously, before we see that continuation, so the retracement, the entire retracement to 8.6, then we see the continuation of the previous sell-off, all right? And that is one of the key points on the back pattern, all right? the other thing that we can now use to bolster our entry is, let me quickly do the measuring. This is going to be a C point, and then this is going to be a D point. Okay. And one thing that you want to remember at the same time as well is the heads have to be standing in a very huge level of what? It's going to be an huge level of resistance above the X, so that when the D is coming down there, it's already aware that there's a lot of resistance over there. What's the point in trying to go and try that resistance when obviously I've done it 8% of the move anyway? Then it's a good time to actually sell off. All right. So, and that's that for the bar pattern. The other thing that is important for the bar pattern is the measuring of the A to B leg, okay? And then you want to know the kind of extension that you are looking for, that on the A to B leg will be either to 1.618, okay? So once you have the 1.6, remember this is 88.6, right? Now, when you're measuring the A to B leg, you are looking for the extension just the way that we've done in the A to B equals to C to D, all right? And then you are looking for that 1.618 level, okay? And that's the reason why we have zone in harmonic, so that in this particular two zone of the A to B leg, all right, which is giving us that extension at 1.618, is actually now giving us a clusters of Fibonacci, and this is how we work Fibonacci clusters out. All right, and this is how we work Fibonacci clusters out to give us what's a much more higher probability zones where things can confluence together and make a lot of difference in trading decisions. So now we are checking the confluence of the 88.6 of the X to A and the 1.618 of the A to B. And that is giving us an entry zone right here, all right? And then what do you want to do with this entry zone? What you're going to be doing with this entry zone is you're going to be looking for candlestick formation. You're going to be looking for candlestick formation that's going to be rejecting this zone. So you want to be looking for price coming into here, bouncing off of here. You want to be looking at price coming into here, finding some sort of indecision inside there, inside this zone. You want to be looking at price coming into here, and then finding it difficult to break this zone, okay? So having all those three thoughts behind your mind, you know fully well that, wow, looks like my D level is not holding. It's a good time for me to actually short this, because it looks like as if we are not going past here. In some cases, you do have price piercing through the 88.6, all right? But finding it difficult to break the X. In as much as we do not break the X, right, you can now be spike above it 8.6 in some cases, and then price will now start to come down from there. And obviously, this is the zone, this is the entry zone for the bar pattern, the target zone for the bar pattern. However, we start from what? That's at 8.6. That's going to be under our trade management now. All right, so we've covered the entry. We know the stop is going to be above the X, right? And then obviously that's where we're going to put our stop. That should give us a very low risk and reward trade. And then now, by you measuring, there are also different kind of couple of ways to look for the targets in this particular pattern. First of them will be to look for this particular extent area right here of B, okay? So our targets can be somewhere just right over there, right on top of B, in case we're going to have some price action that's going to hit support, right? That is the previous resistance, and price will start to go back up. So once we are attaining a 38.2, the process, however, should be to move our stop from the back of X to break even, so that we do not have any risk in this market anymore, all right? So you can do that and start to scale out of your position at 8.2, 61.8 and a full 100. And sometimes if you do have the guts and you can see the trend clearly, then what you want to do is you can wait for price to even get us to 1.618. All right. Along the way as well. Some traders will start to look for that particular peak amount that they can get in a short space of time so that they don't get caught up in whether this is going to turn around and just take it to 8.2. For more traders who have more confidence in the direction, performance or directional bias of this particular chart, they can wait for 61.8. Some will even ride it and beyond that. So the further you are away from your target, then the difficulty is that target to be reached. So if your target is at 1.618, which is down there, there's every possibility that there can be a couple of things that can occur on day two. In this particular trading scenario, that will not get us down to 1.618. All right, but we are well assured that we can get that at 8.2, which is going to be target profit 1. And then I would like us to, when there's a spike of the D leg, but not past X, is a D leg at the close of the candle or the top or bottom. So the D leg will now be at the spike, at the highermost point on that particular spike. That's where the D leg is going to be for it to like. So now, what I want us to do is having understand the zone, having understand how we come by, it's time to go and look into the real price action on the chart to see whether we can start to spot that. All right. So the first thing that we want to spot is we look at our X-ray, which is going to be a move up, which where this price is currently. Okay. All right. And then what we are looking for is once I look at the chart, in as much as I didn't get a deeper retracement past the level of my X, then I can be looking for formation of backwards. All right. So what I'll be looking for is going to be a move like this, using my Fibonacci, the high to low, right there. And I'm looking for what? That's 8.2 to 50%. Okay. So you can see that the move from here to here gives us a distinct, the B point has to always be distinct, a much more clearer 50% level, all right? And then now we have the X to A right there. Now we have the A to B right there. And then obviously we now having the B to C up there. And we'll be looking for the C to D. Characteristically, you can see how price tend to fall quickly. Right, and after the fall of the price, things start to look stabilizing, and whether it's going to now stabilize, who knows? Whether it's not going to, who knows? But what we are looking for now is this: we're now looking for a move from here to here, which we've gotten. All right, let me color that blue because it's a positive move. We're looking for a sell-off down to 50%, which we've gotten. All right, and that is going to be a red. And then we're looking for a retracement back to that. All right, and then now we are looking for what? That particular sell-off into the 88.6 zone. So for this particular trading opportunity, it has not yet activated. It's obviously in the making, and this is our D point. So the best way, the way that I do it is on this D point, if I look at my X point and I see a lot of support on my X point, which is right here, and as you can see, we've got a couple of supports right there. And some of these things are just, they are not complicated. I just need you to pay attention to it. All right. So your support and resistance zone and understanding it, you can see that there's a resistance over here. It acted more as a support. Price tried to wiggle around it before breaking. Another support, another support. And it's so glaring that we have so much support over here. All right. So it's so glaring that now we are looking for a move that will come down to here. Does it mean we're going to start to buy here? No, we're not going to buy there. We're going to be looking for this deep retracement to 88.6, right? For us to then see possible continuation in price to the upside. Okay, so that's one real life example of a back pattern on the market space on euro dollar forming up on the next 30 minute on the 30-minute chart. You got your entry at 1.1184. Okay, your stop, however, will be below the X. All right, will be below the X. So you can then use any of this stop area or Fibonacci area for stop. Depends on how conservative or aggressive you want to be. If you want to be real conservative, your stop can be at 38.2, right? So as to give this a little bit of room, all right? But more than anything else, your stop is generally below the X, which is going to give you a much more decent risk reward right there. Okay, so your stop in this case can be about 10 to 15 pips, okay, or even 20 pips just to give things more room. All right, and that is what we're going to be looking for. We're going to be looking for a buying opportunity in the euro around the zone, just because it's corresponding to some area of support and resistance. If the trade now comes to trigger and comes to fruition, all right, 1 second. Please, why did you select that low for X and the high for A? All right, good question. I selected the low for the X because the low is a huge support area, all right? And we are looking at the charts, we are looking for the possibility of having a bullish back pattern. Okay, so the reason why I select this low for the X is the lowest point, and I see that sharp rally move up, right? A quick move up from this point. Okay, I'm looking at my B point, which is going to be the deepest part of the retracement. It's going to be very distinct. You can see it over here clearly and carefully that out of the all points that comes all the way down, this is the most distinct points that we can see as a B pattern, sorry, as a B leg from here to here on a B leg, and then from B to C. So that B point at 50% gives us a bar pattern right there. All we have to do is just have a bit of patience for price to trickle down little by little all the way down to 88.6. Okay, so that's one example of the bullish pattern on Euro USD. I like that pattern, and I can be considering taking it for a buy opportunity if we get it. Taking it for a buy opportunity if we get there. So Euro USD. I'm going to attend to your question in a minute. Right. So for bar pattern, we are looking at a much more deeper retracement, like as I keep mentioning, a much more deeper retracement to 88.6. That's what we are looking for. So it will not be equal, right? It will not be equal in this case. It wouldn't be equal. Right. So the entry for this, however, is going to be 1.1184, a good entry zone. So a buy limit over there, and then obviously I'll be looking for my stop to be just below the X. I can choose area below here, which is 1.1162. So for the mere fact that I do not have much time to be tracking my position and this and that, I'll just set and forget, right? And then my target, however, 1.1162. My target, however, will now be measuring the whole length of this C to D point, which hasn't really get there in this case. And then, I mean, there are also different ways to do your target. Look at the C to D leg alone. Your target depends on how significant your C to D leg is to you. And then you can look into obviously the entire move. So you can look into this C to D leg, put a Fibonacci on top of it, okay? Then have your first target at 38.2, which is going to be about how many pips? Which is going to be about 21 pips, okay? And obviously, you have your stop just below the heads at 14 pips. So that's a 2-to-1 risk reward ratio if you get there. And that's a good trade opportunity even before it's 8. And you can see it's high probability based on the support that we've got right over there. And that is the back pattern for now. 1.206, right? Okay. Right, so that's a back pattern on the Euro USD. Someone talk about GBP JPY. Right. So if we're looking at the GBP JPY as well, we can be looking at an opportunity like this from the highs to the lows right there. Put your Fibonacci tool on top of it. Okay. And then obviously you want to measure the retracement. So you're looking for the X to A right there, okay? And then you're looking for A to either B right there, okay? And then you're looking for B to C and C to D, all right? So in this case, for the pound yen, you can equally see that we are around the 88.6, although we've traded below the 88.6, but we are having a pattern forming in this respect. From there, second, I can do it like this. Of this, there to there, back to there, 88.6 like that. But what we'll then say is this move from here to here, where are we retracing to? What is our B point retracement? Can someone give me the value of the B point retracement? So can someone give me the value of the B point retracement? How do you find your B point retracement? You find your B point retracement by having your Fibonacci on top of the beginning of your move to the end of your move, and you are watching all your retracement on this level right there. So the first shallow retracement is at 23.6. The second moderate retracement is at 8.2. The normal retracement is at 50%. The deeper retracement is at 61.8. So Samuel says 50. So do we have our retracement point? This is our retracement point right there. Is this on 50%? That is where our B point is. Great. So if it's on 61.8%, do we have a bar pattern? Got it. So just because we have this retracement down to this level, it means that we do not have a bar pattern. What pattern do we have? So what's the name of the pattern that we have? Trap. Somebody says trap. Really? Someone says goblet. What do we have? I can see a lot of goblet. So the goblet retracement at 61.8 is the first harmonic pattern that's discovered by goblet. So this is not a back pattern. All right. So we can't trade this as a back pattern. We know this is a gateway pattern, and then we will be looking for that to be at 78.6, which is right there. Okay. So that would have been the right place to put our D points. And with that particular D point at 78.6, what you would then tend to see is price struggle a lot at 78.6 to keep up so that it can definitely retrace. But unfortunately, this is one thing I want you to understand about the market. It's that the market, it's all about the orders in the market. It's not, you are not the one in control of it. No one is in control of all these orders. Those orders, despite the fact that we have our own mathematical model, there'll be a mechanical model way of looking at things so that we can have a definite execution, so that we can have a definite account protection, which is a stop loss, so that we can have a definite target profit. It doesn't mean that things will always stop in the way that we think of. Okay. So in this case, this particular pattern, if you have jumped in at 786 just because you have the knowledge of 618 and you just jump in at 786 thinking fully well that things are going to change around at 786, then eventually if it doesn't, you will one thing remember that your stop is just below here. All right, the stop is just below the X point. Does it mean that things can get there? Probably. Does it mean that when things get there or when price gets there, it will reverse it? Probably. But in this case, we've lost the 786 on our gapy pattern. So all we can do is just wait and wait and wait. The next thing we want to do, however, while we're waiting, is to check whether we have the support and resistance on while we are waiting. All right, so this is an important support. Now price is going back to that particular support. All right, so we might be seeing things turning around down here, not because of an harmonic pattern. Price just don't turn because of harmonic pattern. Price turn because of imbalance in the amount of orders in the marketplace. So if suddenly we have the buyers fluxing in and with huge numbers now in this zone, a lot of people will think it's the support that's working alone, but it's the new buying orders that comes into the market that makes things start to shift in the upside down scenario. All right, so that's a 4-hour chart. What I'm going to do is I'm going to delete this, and then we look for possibility of getting a Gatling pattern on this chart as well. And if you have any question, don't hesitate to start to ask now. We've had a good time, good 2 hours to do this. And I hope those good 2 hours is much more beneficial for you going forward. So looking at this on the, let me look at it on the much more broader perspective. So pick this low and we look at the possibility of the of the back when it's coming up. Let's look at it on our chart. This is a trending situation, and you have to always understand it's a retracement and continuation. Retracement. So in this case, why did you choose the wrong chart to analyze it? Well, when it comes to harmonic, the time frame does not matter. All right, you need to understand that this is a mechanical trading process. Harmonic is all right. So time frame does not matter because every point where we are looking for our trade is static on the chart. It's more or less like whether we like it or not, it's more or less like we can place a Fibonacci on this blank space, irrespective of wherever the price is, and still be able to say to I can still be able to formulate what my harmonic is going to be, that I'm going to have a move from here to here, right? And I don't need the price to say that to me, to tell me where my points are. Once I put my tool on top of it, then I can easily just trade this, know that this is where my PTA.86 is. The tool is a measuring tool, isn't it? It gives me the value that I needed. irrespective of whatever the price is doing. My tool, which is the Fibonacci tool, can just guide me in the right place even before price gets there. You get where I'm coming from. So I don't need a time frame for this to actually work, because I'm measuring move based on my tool, and my tool does not move in time. My tool is static, and it can just measure anything that's available at a particular point in time. But one thing you have to always bear in mind is your trade that you're going to take on the money should, yeah, your trade that you're going to trade on harmonic should have a secondary function to it, which is going to be either you have a trend line that backs it up, or a support and resistance that back it up. I've given you quite a lot of confluence points to be looking into in the previous video. If you do not know all those confluence points, kindly go back to the video to go and watch it, all right? And then make use of it. What we are looking for, so time frame does not matter when it comes to looking at harmonic. In fact, the shorter the time frame, the quicker you will tend to find something, all right? So let's look at this. So now I have a move, serious move back down, okay? Which is that particular move, right? Now I have a retracement back up, okay? Now I'm seeing another retracement of that retracement back up to the downside, okay? Which means we haven't even crossed this side at all. And then we can now see, can now be saying we are looking for a move up above into that particular level of 88.6, which we haven't get there yet, right? So we can look into this and start to formulate some kind of in the, for this particular case, I'm going to use two tools, right? The first one I'm going to use is I'm going to use the Fibonacci tool, which is right there, okay? So I'm measuring my X to A. For the EU, is it advisable to have up to PP3 at 61.8? Right. So your target, you have to understand what part of the wave you are on, or what part of the trend that you are on. Okay. So you can have a target up to TP3. There's nothing wrong with that, in as much as your harmonic is in line with the trend, then you will be able to achieve your TP3. But if you are not sure if the harmonic is in line with the trend, then obviously you do not have to what? Have to have TP3. Take your TP1, right? If you can't read trend properly, and you know that you cannot read trend properly, but you have access to these harmonic scanner tools and you can make use of it, then what I would suggest is take TP1. Okay. All right. So the first thing first that I'm looking for is my X to A leg and that particular retracement. Okay. So we got the retracement back to 50%, which is good. All right. So now I'll be looking for the A to B leg. All right. And I'll be looking for it to form, to give us B to C. So these are A to B now. Okay. These are X to A. These are A to B leg, which I'm looking for it to possibly form C. It looks like I say we are getting the C. All right. Now I'll be looking for possibility of a, a a continuation. Retracement has already occurred, and now we are looking for possibility of a continuation and continuation back into the 88.6, which is somewhere over. Okay, and that's where we are looking for our harmonic. And as you can see previously, in this area we've got loads of what? We've got loads of support going on there. So if price can come back to there, we'll be looking at the possibility of price coming back like this. Okay, going forward because the trend is down anyway. So if we can catch that move, we expect the C to D leg to run very fast and break above this zone, get stuck somewhere around there as we start to fall down again. Right, so that is using the harmonic tool. The other tool that I can use is my X to A, X to A right there, and obviously A to B somewhere around there. And then now we have the B to C, which is a complete retracement of the A to B at 88 or 86%. All right, and then we now have the D at 88.6. Okay, and this is where we are looking for possibility of a sell-off the nearest future if price return back up to this. Okay, right, and you can see that the trend is down for this. We might be looking for possibility of having a trade set up over there. So now as we start to see price moving back above, especially once we now see price crossing above the B point, okay, positively, then we can now have more confidence in saying there's possibility that we're going to want it to be. We need to see that move back up to that particular zone, right? And that is for the pound yen. I hope those two examples will go a long way in the way that we start to see a back going forward. I'm more than happy to call this a night now. If you have a question on this particular pattern, please do ask. Always remember that the move from C to D can be very, very spike and be very, very solid, strong move. Okay, just to scare you out of the market, because we will see a serious buying process going on in this particular case, and then want to buy and sell. The law of traders will do that, but because it's a high probability trading zone, and this kind of place, so any question whatsoever, kindly start to ask. Right now, I'm willing to call it a night. Over here, there are a couple of interesting things coming up for us. I'll be announcing them later on in the chat book. In the meantime, I hope you all have been lovely night. Thank you so much for staying tuned. Thank you for letting me back. I want to say love back chat so you can see how I've spotted them for you in the two pairs that you've given me. They are not, I did not research for them, and I want you to, oh, sorry, I'm just saying, I'm going to be calling it a night now. If you have any question, don't hesitate. So what didn't you get on the GJ analysis? What is your question? What did you not get on the GJ analysis? We are looking into an harmonic pattern that has not yet formed, okay? So what we are seeing is we're looking at this live market, and we are looking at this particular move down from an area of what? An area of previous resistance that moves all the way down. We are looking at a retracement of that, yeah, and then we are looking at the further retracement into 886, which is going to be right there. Okay, the retracement of this move to 88.6, and then the sell-off. Hi, Chuma, all of you cannot hear me. I don't know the reason why you can't hear me, but this is a chart. This is an harmonic pattern in the making. Okay, we've only seen the S to A, we've seen the A to B, we've seen the B to C. Now we are waiting for the C to D. Okay, we are waiting for the C to D. What I would suggest is do not hesitate to watch the video. It's recorded. Hopefully you can hear me clearly in the video and then be able to make use of this opportunity right there. All right. Because it's late over here at the same time as well, and I do appreciate that you all joining and you manage to follow this. And I know a lot of people still need to sleep. Some people have got their own day job and stuff like that. So I'd like to say a massive thank you and welcome Angela Lunga, Samuel, Rosie, Olugbemiga, Marcel Gibson, Forex Delight, Edward Chilma, Bumi, Ade. If you gain something from this webinar tonight, from this training tonight, do not hesitate to let me know. At the same time, if you need any assistance going forward, I believe you all know all the services that we offer, from this kind of training to mentorship to funding to having a YouTube channel where you can go and watch how we are dealing with the market and understanding and having an understanding towards it. I hope you all have a good one. If you want a bit of a contact details, if you go to our chat group, you'll be able to find me and then obviously ask questions on our chat group. I will send in some contact information for one particular, right? So we've got some contact information right there. I'll send in. If you want to learn more about the way that we look at the chart, about the way that we analyze the chart, if you want to learn technical analysis and stuff like that, you can then come into our YouTube channel and go and start to watch. There's quite a lot of educational video in there, how we trade the news. And obviously, if you want to follow me on Instagram, you are free to do so. At the same time, you're welcome. What I'm gonna do going forward is I'm gonna be looking into some trade opportunity, and I'll be posting them into the chat group, and hopefully you'll be able to. I'm glad you do, and hopefully you'll be able to look at those and obviously make good use of them. You can take those trade. And one thing I want you to understand as well as a trader is, do you understand the meaning of emotion at all? And do you understand how emotion affects your trading? Right. And do you understand that the only thing that you need to be successful is to conquer emotion, right? Not to forget about it at all right? You still have to have it and keep it in your tools bag each and every time when emotion wants to let you to make a decision in trading. Then you remember the last time that what kind of results you get from that kind of emotion. All right. So emotion is what will give you the sense of taking a trade without having a stop in place. Emotion is what will push you into taking a trade without having a method behind it, like understanding that when you take this trade, you need to have a stop. As much as you have an entry price, you need to have a stop. And then at the same time, that stop needs to just be commensurate to what you can afford to lose. If your stop is a lot more than what you can afford to lose and you're taking that trade, that means you're acting on emotion, all right? Because you're now thinking only about you're thinking only about the profit. You're not looking at the whole trade process that a method, a methodological trading style needs to have, right? You need to be able to overcome that to be successful in the long term. So say, for example, you have $100 account, you want to trade the lowest minimum and be growing that like a baby so that you can have peace of mind when you are trading. It's quite important for you to understand the essence of emotion. If you do not, you're gonna be trading like a suicide, as someone who wants to commit suicide. You know what I mean? It's better you just say, broker, I want to keep party today, just have my money and enjoy yourself. And once you see that you don't have the strength to just understand what you're doing, just take a break, sit up away from the computer, away from your phone or anything, and don't do the trade at that particular point in time until you get clarity. Because you need to understand that this is going to be there forever, this is going to be there for a long time, and then you don't have to worry yourself about whether there's going to be a trade opportunity or not. You see where I'm coming from. All right. So I really do understand and appreciate your time. Have a lovely night. Thank you so much, ladies and gentlemen. Bye for now.